The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 20th, terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And I believe we should never, ever be prisoners of our past, but always be pioneers of our future. So let's do everything we can to pioneer our day. And let's always remember that life happens for us, not to us. When we can live like that, folks, we can find the gift in every set of circumstances that's upon us. And trust me, the universe isn't here today. Of course, I'm here to serve you. That means that as I proceed out here, so I'm just getting in front of my screen. So this is going to be truly live, getting the feel for what's going on. I've been away from the computers here for a couple hours. But the Dow is trading out at Dow Futures 17,576. ES Mini trading out at 2,037.25. Key level out here is 2,039. That's going to be the key level of the day. We close below that today. We're going to see, you know how I've been calling for the market to, after that October 31st, move up, move sideways, consolidate, make it a choppy market. Some days good for the bulls, some days for the bears, a little bit for everybody. This is the one where you close below 2,039. And what we'll see is the market move a bit lower. We'll get that retracement. So for those of you out there that are licking your chops to be able to get in on this nice Santa Claus rally that's underway, that's what that message would be. The S&P right now trading out at 2,037. NASDAQ futures are down 18 points, trading out at 42.05. In the currency market, relatively flat out here, and that includes the euro, Japanese yen, I believe. We'll go take a look at that. Goldilocks back $2. Really not too bad considering green out here. So gold is back $2. Silver's back 10 cents, trading out at 16.8. It's trading out at 4.39. Over in Europe right now this morning, the DAX is off about 72 points. Let's go check in on the DAX first. Let's look and see what's going on over in Europe. Here's some markets. Yesterday, just simply a little spinning top candle out 93.78 or so, 93.80. You are at 9,400. It's only another 20 points. Then you get a little evening star formation out there, and that's a bearish reversal signal. But at this stage of the game right now, not so much, not just yet. We take a look at the FTSE out here. The FTSE right now off 45 points. If I take a look at its candlestick pattern out here, really not too shabby. Running down and testing the 8-period exponential moving average, and that's they're both right about the 66.51, right where it's trading right now. So not much damage as we speak at the moment. So we'll come back and we'll focus in on our markets and what they're doing. But I want to first start off. Go take a look at the euro. Look at the euro Japanese yen. We'll expect live streaming version of TigerTV. Get the homepage at TFNN.com, and of course sign up for this weekend's workshop that I've got. But just get over to that homepage at TFNN.com and click on that TigerTV button. You'll be able to see these screens in HD. I mean, read out the numbers. You'll be able to see right now that says 148.057 on the euro Japanese yen. Now, at this stage of the game here, you do have potentially a reversal candidate. You've got the shooting star, but we got a lot of time left in the trading session. Euro Japanese yen ought to be about 145.60. That is a level of old resistance that now should become new support. Why is that resistance? Hey, you got a swing point out here from December 27, 2013. That's really your target line. Now, you break above a swing point, as this has, then you can make a expansion of a set of swing points. I'm not going to go to the expansion here just yet. We're going to pay attention to what the markets are doing. The euro Japanese yen, it's in an overbought condition out here, pulling back and actually testing that level. That's what I would prefer. So as a Santa Claus rally kind of guy, I would prefer to see the euro Japanese yen come back and test that area, reject it, meaning go test it, close back above it, and then it would be off to the races, and all preferably to take place right around the day after Thanksgiving, so that would be next Friday. But we'll just simply have to watch. I'm not going to get too caught up into the timing of all of it. We're going to watch for patterns out here. So the Euro-Japanese yen is saying, okay, this move lower, or the futures trading lower, this could be the real deal out here. Now, when I say the real deal for a nice retracement to set up the next bottom inside the market out there. So nothing has changed along those lines. Now let's switch back over and take a look at the futures. I'm going to do a couple of different things out here because I had some things I had to take care of this morning, unexpected things that came up, and luckily I was able to get back here in time. I had to send out the newsletter very early this morning, so I need to just, and I haven't had a chance to send out any kind of update or anything, so I'm just really going to just show you what it is that we're looking at here. So as we take a look at this, the weak link inside the market, remember, when the markets are moving south, you want to see what the weak links are doing. You know, as they're moving north, you want to see what the strong hands are doing out there. And really, you want to be able to take a look at both, but oftentimes we can get the message with regard to the weak links, say just how real is the move. Yesterday, as an example, Russell 2000 was down 1%. The other indices, not so much out there, but a lot of damage was actually done yesterday. It was I don't know what the right word is, but you know what I'm trying to say. Subtle. There you go. That's the word it's not the word I was looking for, but it's the word I came up with. Now, if we take a look at the 2-hour chart, the 120-minute chart here for the Russell 2000, number one, you're going to see one of Stevie's favorite patterns here, up at highs or lows. In this case here, it was up at the highs. You got this price Rhodes momentum indicator signal. Also happened to be a seventh wave to the upside, so it can also get one of Basil Chapman's moves out there. I mean, that's a beautiful thing. Of course, then what we had some reversal candles that took place out here. Now what we seen actually is yesterday as the market was moving down, which is kind of an unusual occurrence, right? As the market was moving down in this 12 noon time frame, remember it's a 2-hour time frame chart that we're looking at out here. So at 12 noon, what kind of candle was formed on the Russell 2000? Yeah, you got it. Your friend and mine, and that's the hammer candle. It was doing that. While it was doing that, it was also getting to potentially a trough G on the way down. That says that support of that hammer candle, which, by the way, is at 11:48.20, is muy importante. Now, here's the deal. And here's kind of the why it's going to be interesting to see today's open and what happens. If we take a look at just simply normal A to B equals CD down patterns, this too is one of the patterns I'm going to be teaching folks on this coming this Saturday. Of course, it's a 7-week workshop out here. But if we take a look at the A to B equals CD to the downside, take a look at where price on that hammer candle got down to. And take a look at where the one-to-one projection was. 1147.90 was the projection, and price inside the come on, don't do that to me. And price got down here to 1148.20. Good Lord, you got to love that. You got to love that. So you got a 1-to-1 A to B equals CD to the downside. You break that hammer. That says that, to me, that says that, number one, you go down to the 1140 area. But remember, you break below a hammer candle. If you're long, you're wrong. So now if we just switch back here, it's just going to be a little bit easier for me. So that's going to be a key level to be watching because we want to understand what's happening with the weak hands out here. Now, if we switch to the daily chart here for the Russell 2000, and we just simply take a look at retracements from low to high out here. That means we're going to come from the swing point low inside the Russell. It was October 13th. The Russell made a bottom before the general market did the last go-round. The high out here inside the Russell, November 13th. I'm pretty sure that it may have made a so-called intermediate term high before the rest of the market. So if we take a look at on the daily chart where price ought to move down to, 1132 becomes the number to be paying attention to. And a move below that, you're looking at 1096. So that's what's going on in the Russell. Now, my chart here is delayed by 10 minutes. Shouldn't be that big of a deal. I don't think that as I take a look at the general market here, nothing really having fallen off the cliff. So the Russell probably trading right around that level. Now, inside the NASDAQ out here, if you were listening yesterday, what we pointed out is the NASDAQ, and this is the 120-minute chart, the NASDAQ had not broken through for 2 full candle sessions. This little black squiggly line going across my screen out here. Right now it's priced at 42.16. It was somewhere right around that level yesterday when we were on the air. Maybe it was 42.18. Well, what happened here this morning at 4 a.m.? We saw that. Now, yesterday, let's just go back to yesterday, right? Because when we were on the air at coming off the air at about 11 o'clock, that level was being pierced. But by the end of the trading session, it too, it didn't form a hammer candle, it formed a little doji candle. But what it did do was it held that level of support. Pretty amazing. And it wasn't really amazing to you or I because we know that coming off of this low, coming all the way back here, if you're watching us on TigerTV or watching us in the den, we know that coming all the way back to the time frame of, October the 17th, after we came off of those lows out there. And by the way, when that bottom was formed here inside of the NQ, there is that other pattern, beautiful pattern, that I'll be teaching this Saturday. Remember, folks, I've got a 7-week workshop. Never done this before, but it's really it's my when I get to do I am. If you think I'm impassioned about what I do, and you've never attended one of my workshops, you've got no idea. And the workshop is just an opportunity for me to be able to share the absolute best of the best tools that I know of that are inside my tool bag out here. And really, most of my tools are tools that I took from great artists out there and just simply made them better by immersing myself inside these tools. And by immersing myself, what that means is I got over 10,000 hours into this stuff. So if whatever stage of trading that you are at, 10,000 hours, the cost is $3.95. If you're a subscriber, it's $2.95. $3.95. The cost of that is, 3 cents an hour out there? You can do a lot of this stuff by trial and error, but you may not catch the little nuances, those little subtleties that I'm going to be sharing with folks out there. So if you are if you're grappling, if you're frustrated, if you hear these terms, A to B equals C, D, price, relative strength, divergent patterns, candlesticks out here, then you want to sign up for this course because in that 7-week period of time, I want to teach you everything that I know. I want to be able to unleash the trader within each of you out there. So come on over to the homepage at TFNN.com. Look, it's a tough time of the year to actually be asking you to sign up for a workshop, right? We got the holidays coming. I can tell you that next Thursday you're going to be sitting around the table and somebody's going to say to you, Dad or Mom, brother, sister, what would you like for the holidays? What do you want for Christmas? What do you want for Hanukkah? And they're saying that to somebody who pretty much has everything. Give them the gift of your knowledge. Give them the gift of education. Give them that gift. Sign up. Give them some cards at the holiday and say, put some shekels in it, put some money in it, put some dinero in there. That's the education that you want. That's the gift that you want. So no better time to take advantage of it than right now. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we took a look at the Russell 2000. We took a look at the NASDAQ. Let's go take a look at the S&P 500, the ES Mini, I should say, and see what kind of signals and information we've got out here. Now, number one, yesterday, again, during that 10 a.m. to 12 noon session, it's a 2-hour chart, by the way, that we're looking at. We know that that level there, that 2039 area, which I identified and said, look, if which we also talked about here this morning, you see it close below that. And then the sellers start to become in control. Now, during that session between 10 and 12 noon yesterday, the actual candle at home, combination, it's unusual for this to occur, but a combination of both a doji and a hammer candle. So just like in the Russell 2000, we were taking a look at that same candle, that same blowout there, and how important it is. The ES Mini, which has been stronger than the Russell 2000, right now is trading below that session. Now, this is a candle that, unfortunately, because it's a 2-hour time frame, doesn't end for another 35 minutes. So the key here is going to really be on the open and for that first 30 minutes of the cash market out here. The price point to be paying attention to, the low of that hammer, which we're trading below right now, just slightly, low of that candle session is 2037.75, your 2036. Now, look, piercing the hammer candle is fine. Hammer candles act as, or should act as, support out here. Yesterday, that's where the bulls were in the marketplace. That's where they came in and they said, no mas. Not letting you drive price down. So there was some buying that was out there, and during that 2-hour session, price was able to be driven up. Well, that's still a possibility. Price getting back up to the 2039, that's a possibility as well. I don't know which one. And I was looking to the euro-yen to really give us a clue out here. Was looking really for weakness inside the Russell 2000 to go ahead and give us a clue, but it too has it. Now, if in fact prices break lower, which you know is my expectation. I've had that expectation here for a while and have been frustrated, even though I know that I've told you it's going to be frustrating. So even though you can have an expectation of being frustrated out there, that doesn't mean that you alone can't get frustrated every now and then. But if we take a look at price projection, we'll just look at the A to B equals CD tool. We'll start off at the high out here. This is at coming in the 4 o'clock close. This was on the 18th. That's your A point. Your B point's going to be the low of that hammer. Your C point is going to be up here. Looks like about the 4 o'clock close yesterday. Well, we're pretty close to a 1-to-1 A to B equals CD to the downside here. 2,034 and a quarter is the exact amount. And so far, the actual low that we've seen out here is 2,035.25. We've gotten down to potentially in this 2-hour chart, fourth wave count on the way down. So it's the open here this morning is really going to be important. Now, 2034 gives way, and I would say if we see it close below that hammer candle, 203775 coming into 10 a.m., then we're starting to take a look at a little bit deeper retracement. And I hope to goodness we are, because I'd like you to be able to get in on the market at a lower price. Now, back in the ranch out here at the ES Mini on the daily chart, as we take a look at it out here, it may have support. Let me just do this. Let me get rid of that. It may have supported its market profile low, so that's an area to be watching. That's at 2014. But just normal retracements out here. Let's really just simply go to our normal retracements. That's a low from October 15 to the high that was put out here on the 18th, just a couple trading sessions ago. That says 1961. So 1961, 1962, only a dead cat bounce, only a 0.382 retracement. People are going to say the Santa Claus rally is open. Everybody, that is, except for those of you that are listening in here, right now at TFNN, because I'm here to tell you nothing could be further from the truth. As much conviction as I had that the market was going to make a bottom in October out here, I've got equal to or greater than the amount of conviction that if we do get a retracement, that it is a buying opportunity. It's just a matter of finding the spot out here. This market is going to, is it the Toyota commercial? That's zoom, zoom, zoom. This market out here is going to continue to zoom, zoom, zoom higher. The hope is that we see some of these levels get broken so that you can actually get in at a better buying price out there. And that's what's going on in those three markets. I don't know. We can take a look at the Dow futures out here, but I think we covered it pretty darn well. But let's go take a look at from low to high out here. And that low that we're going to be taking a look at is coming in on the trading session of October the 15th, all the way to the high that was put in out here on the 18th as well. This one here, the dead cat bounce is 16,962. You're at 17,570 out there. You make that kind of retracement, and people are going to be, but you know what to expect now. And that's the cool thing. So we've got the parameters. We've got really everything lined up. Now we just have to go see what are the bulls and the bears going to do out here. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 64 points. Trade out at 17,620. S&P down 7 at 2,041. Composite off 21 points. She's traded at 46.54. Russell 2,000 off 4, trading at 11.53. DAX off 72. FTSE down 53. Gold is off. Gold is flat out here. Just turned to zero. Silver is down 7 pennies. Platinum's off $5. We've got what do we got out here? My screen's I got a number of screens going on here. Light sweet crude is up 57 cents out here. Moving to the upside. Hey, one of my favorite companies out there, Williams and Sonoma. Now, why would it be Steve B's favorite companies out there? I think they still make it. Do you like chocolate? Do you like, I heard somewhere we're going to have a shortage of chocolate out here. Maybe it's time to stock up on this. If you like chocolate souffles, have you ever been to a Roy's restaurant? Remember the first Roy's that I went to in Maui out there? The original one opened up in Honolulu many years ago. But I got to tell you, if you've never had a Roy's chocolate souffle, well, don't worry about it. You can order them from Williams and Sonoma. A little bit different, but pretty much they come out the same thing. In fact, so much easier than going through the cookbook for Roy's out there. Just simply get this little ice cream scoop, put it in a souffle dish, stick it in the oven, and you got that nice, creamy, milky, it's kind of dark chocolate, I believe, center out there, and it's very good. In any event, Williamson Sonoma up triple nickels here, $5.55, up about 8% this morning. Dollar Tree, that's up $1.85. Second Sight Medical Products is what I'm going to guess it is, up about 9% this morning. Best Buy, that's up $2. L Brands up 87 cents. Caesars Entertainment up $1.32. Mobileye up $1.63. Rand Gold Resources up 97 cents out here. So the move, by the way, in gold and gold miners and everything yesterday, way overdone to the downside. Really just some bears out there trying to shake the tree, but they're going to get stumbled here over the course of time by the bulls. Moving to the downside out here, you got Green Mountain Coffee Roasters GMCR off $6 out here. GoPro down $5, I believe, because they're pushing more paper to the outside. CPA, cut, paste, and assemble. Copa Holdings down $5 and change. Perigo Company off $2.50. Baidu down $3.75. Illumina off $3. Illumina, I think that stock had one heck of a breakout not too long ago. Most certainly did. Boy, wouldn't it be nice to see Illumina pull back into this coming Friday and test this little breakout here recently. That breakout inside of Illumina, wide price spread, accelerating volume. That was done on October the 21st out here. Make it so I can actually see this. This had moved topside with 3.6 million shares out here. And boy, it'd be nice for it to come back to about this 174.01 level out there. If it breaks through that area, then it'll come back to support number 1. That's going to be the high 166, even Steven, from the trading session of October the 20th out here. Now let me put this on a. Yeah, it's up at all-time high. So this would be a nice one to put. Let me put on a weekly base. Let me just see what the weekly charts here for ILMN look at us. This might be something nice to put in your little stocking stuffer if it in fact can pull back to that breakout area. So it had a swing point from March 3rd, but let's just check out the weekly. 12 million shares there, broke above that with about 12 million shares. So that's cool. Broke above a little bit of a consolidation, some resistance. You're trading back below that, so you're going to certainly want to see it get back above 183.30. But your priority, you'd really prefer to see this thing come back down and get down to that breakout area. No idea whether it will, but that is ticker symbol ILMN. Okay, so let's come back and take a look at the intraday chart out here for the ES Mini. We'll just start off. We'll start off with the ES Mini. What is it that Stevie sees out here? Well, this is a 30-minute chart. So we looked at the 2-hour chart earlier. Remember that number that I gave you, 2,039.25. It is muy importante. That number, you've got no idea, but of course I'm sharing with you and I'm telling you that is an important number to be watching. And we've got price back above that level. Now, as price was pushing down lower, making it really its second kind of wave count to the downside here. But right now, and we've got still time left in this trading session. We're only at 9:39 a.m., so we got 21 minutes or so. But you close right here at about the 2,039, over 2,039. We'll just call it even Steven out there. And then you'd have a little morning star, reversal candle with one of the patterns that I'm going to be teaching here on Saturday. That's a reversal signal, and that says, okay, the move to the downside for the moment is over. It actually would be giving you a buy signal on a 30-minute chart. Are we there right now? No, we're not, because it's only 9:39. This session does not end until 10 a.m. But at least in this case here, we know what we're looking for. It made things easier. And that's really what technical analysis is all about. It's because look, I specifically know what it's like to wake up in the morning, look at CNBC, see that the futures are down, no matter what side of the trade you're on, short or long, and not know really what in the heck does that mean out here. I want to be able to teach you. Well, I'm going to teach those that attend. I'm going to teach people to be able to go read the charts and take a look at the patterns and understand exactly what is in play here so that you can make your trading decisions, so that you can eliminate all of the gosh darn noise out there that just gets in the way of you. It gets in the way of you being successful and unleashing that trader within. And that's what I'm going to be doing. So if you've got and everybody, it's all about growth. I know that every single one of you out there that's listening, that just maybe listens in just to say, hey, what's going on with the market, or maybe to confirm a trade or something along those lines. I know that each of you want to be able to pull in this technical analysis. It's really all about time. The only reason that any of us don't really take action, it's time and money. All right, it's time and money. I mean, we all use that. We all use that logic, and when we step back and we think about it, it's the silliest logic that any of us could use. Because the reality is, when an opportunity presents itself, to be able to maximize your time. In this case here, I'm doing a 3-hour workshop spread out and then another 3 hour, but in 3 hours to have somebody that has immersed themselves and taken the best patterns and made them better and be able to provide you with all that information so that you've got more than just a running start. That you actually can do something with it. To me, isn't that really what it's all about? So as I said, I know it's a tough time of the year out there. It's Thanksgiving. It's got Christmas. You got holiday. You got every holiday and money that's got to be spent. But people are going to be spending money on you. And there is no better investment that I've made in my life. I know it's got to be the same for you too. No better investment than the one that we make in ourselves. Because when we invest in ourselves, time, money, energy, knowledge, we're really doing it for our kids. We're really doing it for our other half. We are, and that's really the benefit of it. So, in any event, we're still watching the ES Mini here. We'll get our signals by the 10 a.m. session as we go off the first hour of the Trader's Edge out here. But at this stage, the suggestion is that the move to the downside is over. And we had those points to really be able to take a look at on the longer-term charts out here. Again, remember, weakness was really helping us out. A little bit of a delay, but it was the Russell that led things down yesterday. It looks like the Russell that is the strongest of them all here this morning. So that hammer candle so far on the 120-minute time frame holding. And of course, we've got that hammer candle on the 120-minute time frame for the S&P futures as well. So that's really where we're at in the market out here. Of course, we want to pay attention to what's going on inside the VIX index. No question about that. VIX index right now, it's trading out. Let's take a look at it, see what it is doing. Let's come and take a look at it this way. Okay. So now we got some information, or potential information out here. As we take a look at the VIX, 1504 is the number for the day today. If you see it close above 1504, that spells trouble out here. Now, the intra-session high so far is 1468, so it hasn't gotten up there. Tag that area. That's another confirmation. As long as the VIX is trading below the 50-day exponential moving average, the market will just simply continue to either move sideways or move higher out there. Why? Because it's done it for so many years. It is another way to use it. This is Steve-O's liquidity gauge to help us identify what's going on inside of the markets out here. At this stage, it's still in bullish mode. There are some cautionary signs out there. There's no question about it. Those cautionary signs, maybe they don't come up until Monday of next week. I don't know. Right now, it's just really a bit of caution. There just isn't the energy at this stage for the markets to push their way down. And that's what we see inside those price relative strength divergent patterns. But you really need to learn how to trade those. If you just take it at carte blanche, you're gonna get just simply crushed. You're gonna get taken to the woodshed out back, and you're gonna get tarred and feathered. And I don't want you to get tarred and feathered. It doesn't need to be like that. If we go take a look at some things here that are moving in the marketplace, I mentioned Williams and Sonoma, so let's go see what's going on there. WSM is the ticker symbol, and kind of a cool store too, generating revenues of 1.1 billion versus 1.05, so growing the top line out there. That must be my orders of chocolate soufflés out there, frozen chocolate soufflés. Net earnings 64 million versus 56, gapping up. You got wide price spread today. Now Williams, how about this? Williams and Sonoma here getting back to an area where this thing had broken down. It's trying to repair that window. Looks like it's going to, but we'll know by the end of the day. How will we know? Well, if it closes above 74.82, you're trading at 75.44. Now, the volume to the downside, boy, that was a big volume day, and that was a earnings day. That was after an earnings release. So you got the most recent one is a positive the upside, and taking out the earnings release from that took place on August 28th. Maybe it was before the bell. It could have been after the bell on the 27th. Needless to say, 11 million shares the downside. You've done about 700,000 shares the upside in 14 minutes of trading, so not too bad out here. So Williams and Sonoma with these gaps, this if it can close above. Here's where you really still got to use the, even though the swing point says 2.9 million shares from August 27th, you really still got to gauge it based on 11 million shares. Hey, you get more than 11 million shares today, Williams and Sonoma will be forming one heck of a A to B equals CD pattern to the upside. But man, this thing has got some holes in it. This thing has got some gaps. This, that's a weird psycho stock. There's some better ones that you can trade out here without all of these gaps, either to the downside or to the upside out here. WSM lead the charge to the upside here this morning. Let's go take a look at Restoration Hardware. RH is the ticker symbol. She's up about 5%, up $4. I don't see the news behind it, but let's go take a look at Restoration Hardware. Now, Restoration Hardware. Here's the stock that came back to a breakout area. This is where, again, gaps are your friends out here, nothing more than just simply the breakout area. This thing had broken out on June the 12th, 7.4 million shares. When it pulled back with 1.2 million shares. That's on October 14th and 15th. That's nice. As the market was making a bottom, this thing was just simply coming back to a breakout area and doing it with lighter volume. Now at this stage of the game out here, you've got a small A to B equals CD. To the upside, there's also another gap to be paying attention to, and that's the one that is trading to trade into right now at 87.65. If we take a look at a B point out here of the lightning bolt pattern, that's the trading session from November 3rd. 80.79 is the number, 439,000 shares. Price got above it was 650. So you've got to confirm AB equals CD. You got to confirm the lightning bolt out here. Let's go see what that price projection is, at least the 1-to-1, but it looks like more than that to me. 1-to-1 takes you right to the bottom of that gap. 87.62 would be that price projection number. 87.65 would go ahead and repair that window, would close that line of resistance out there. The volume to the downside was, again, 2.5 million. You're at 185,000 as we speak. You close that, and this thing ought to go, and next level, 90.61. I'd have to say 94.41, which takes you right to the swing point high from June 30th, only 1 million shares up there. That is on ticker symbol RH, Restoration Hardware. Another nice store to just kind of walk around. Let's take a look at some things moving to the downside out here. So we've got the CPA, the cut, paste, and assemble Copa Holdings, down 9% off $10 out here. Looks like their third quarter profit declining. Net income is $65 million. Ooh. I would say that they need to get a new CPA out here. $65 million in profits versus $126. Let me see what they do revenue-wise. Not too bad. Just down by about $10 million in top line, equated to about $60 million in bottom line. Interesting. Let's go take a look at what it's doing. It's moving down. Wide price spread to the downside out here. Of course, this has had some problems. This thing had gapped down. Volume off of the highs, looks like, back here in August 7, 2014, 2.8 million shares to the downside out here. Now what is going to happen is it's going to try to set up a huge A to B equals CD to the downside. Let me put this on a weekly chart out here. Get a feel, see if we can find any kind of high volume lows that maybe this thing might be targeting out here. Well, you had your first A to B equals CD to the downside. That has already completed, and now you could have the second one out here. But if you get a second one means this thing needs to close below 97.21 and do it with more than 4.2 million shares on the weekly basis. Now, we're into Thursday. You're not down into that swing yet, but you've done volume of 3.2 million shares, so it's got some pretty decent volume. I suspect what this says to us is it ought to at least go down and test 97.21 right in that area. That is Copa Holdings. Green Mountain Coffee Roasters, GMCR, off about 6%, down $9.45 as we speak right now. Let's go take a look at the daily chart and see what this thing is doing. Now, this has truly been on fire out here, but gapping down this morning. Volume is 902,000 shares. Looks like what price ought to do is come back and try to get back into the breakout session that took place inside GMCR. That was back on August 22nd. That was 10 million shares to the upside. It's got another area of support too, 135.62. So 135.62 and then 125.40 if you get it closed below that 135.62 mark. Steve Rhodes, TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow off 55, S&P down 4, composites up a point, Russell 2000 actually up a point. So from weakness, we find strength out there. And, of course, you know that's how it works in life. You know, when I came up with Tommy and myself, we came up with this 7-week workshop, really stemmed from a bit of a journey that I have been on about 6 years ago. In fact, it's a little over 6 years ago. I've been attending a different, self-help type programs out there, books, like to immerse myself in that. So I've been studying the subject matter for began studying that back in the mid-'80s out there, 85, 86. In fact, I think I probably have one of Tony Robbins' original cassette tapes. I actually finally threw them out. It was kind of like, why am I holding on to these things out here? You can't even find a cassette player for the most part. And then it was, going, and many of you have done the same thing, I'm sure. You've gotten books by either, Zig Ziglar, Brian Tracy, Dennis Watley, and I was in the computer business, so I was fortunate to do a number of courses that IBM sponsored. Back then, it was a beautiful thing. They did a number of things in conjunction with Harvard Business School. So that's actually where I met Tony Robbins' teacher. And then Tony Robbins' teacher's teacher, a guy by the name of Earl Schoaf. And Tony's original teacher, the guy that he used to work for, was Jim Rohn. Now, Jim Rohn, before he passed away, and I've read this specifically, he would tell you that Tony did a better job at being able to master that which Jim Rohn had put together than actually he did. And that's really how it works in life, right? That's how we always evolve and we have change. Things get better. And that's really what the workshop here, the 7-week workshop that I'm going to be hosting on Friday is really all about. But the journey that I started on 6 years ago, instead of just attending those events, I wanted to know their recipe. I wanted to be able to provide strategic interventions for others in my life out there. I wanted to be able to be that coach. It's more than just being a life coach. It's about being able to find what obstacles are in people's ways and be able to change them truly like that. If you've ever attended any of those events, you know that to be the case out there. So I began that journey, and right now I'm in the in one of the last real phases of that process, which is not a 7-week course. It was really a 18-week course out there, and so I was intrigued and wanted to know what they knew so that I could really help others out there in life. So it's really being able to transform and take those things and that set of tools of trading is basically 80% psychological. And the other 20%, it's really in between our ears out there. And when it comes to psychology, it's about being able to read the patterns inside the marketplace. It's about being able to understand patterns in the marketplace. Those patterns here, if we take a look at the NQ, we talked about this yesterday. We talked about this black squiggly line. We talked about it coming off of the lows back in October, how this held as support. 4 o'clock this morning, and the futures were thinly traded. So 4 o'clock this morning, we saw a break of that. If this really is going to be the sign of the downturn, and it can be, but if it is, what I can tell you what should happen out here is 42.17 should be resistance, and you got 3 minutes in order for that to take place, and you're at 42.24. So I would have to say I don't think so. At least not this time out here. And that's by going and taking a look at the Russell 2000, being able to just simply jump in place out here, take a look at the, and look, I can teach you to do this in lickety-split time as well. And if you take a look at the Russell 2000, you got now 2 hammer candles supporting this 1147 type area out here. Of course, this is a 2-hour chart, and this one does not end. Well, it actually ends in 2 minutes out here. 10-minute delay, but it looks like you're going to have, looks like this level here inside the Russell 2000, 1148 is really important support. The question is, because I have been calling for a bottom by November the 21st, the question is this actually it? This is Steve Rhodes. This is TFNN. Have a great Thursday, folks. Stay tuned. The second hour of the Trader's Edge will be up next. If not, have a great day, and I look forward to seeing you on Saturday at the 7-week workshop. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.